Yes, now traders, I have brought you something that is important to you to get to know, to understand the market itself, and to make you avoid use of indicators. So it is market structure. As we know, the behaviors of markets usually trends, consolidates, and trends. So this is uptrend, this is range bound, and this is downtrend. So as usual, we get a low, a high. Okay, so when we break this high like this is what they call breakup structure. So how do we read the market to get to know its direction? We read it from highs and lows. So you have got a high and a low. So I've broke this high, previous high, creating another higher high. So that kind of market is called uptrend. So that is the uptrend market. After breaking, you will see that price pushes back, pulls back a little, and again breaks another structure. So when you break another structure, that still confirms that you are still in an uptrend market. We are looking only for buying opportunities. Okay, so after that, a market sometimes consolidates when it is likely preparing for a reversal or something like continuation again, because the market moves from areas of balance to imbalance, imbalance to balanced. Okay, so when we come back, so you see again the market shifts. Now we have what they call market structure shift. From this low, at this low, the market shifts back to downtrend. That is market structure shift. We have been buying, but the market has shifted. Now we are selling. Okay, so now we get a high, a low. Okay, now we get a higher low. This high is high, but it is low. Okay, so this becomes lower high. Then we break this low, becoming lower low. Okay, so this becomes a breakup structure. So the best ways to read market is getting to know where is the breakup structure. If it is upside, we are in an uptrend market looking for buying opportunities. If it is down, selling it. Okay, so you see market after breaking the structure downside, we see a pullback, then we break another structure. Okay, we break here another structure, we have broke another structure. What does it mean? We are still in a downtrend. Okay, so I want you to go to the live, because the trick, most of the trick is here on the live chart. I'm on Euro USD. As usual, my higher time frame is 15 minutes. So I want for us to start about how to identify market structure, where we are, where is our next move. Okay, so Euro USD, I'm gonna start at this point. Okay, so when you're marking market structure, I'm gonna use this low. Okay, you had here a high, this is a high, this is a low, isn't it? So when I mark from this, so I want you to get to know how to know fake breakup structure, fake market structure shift, and real one. Okay, so we have broke this high, isn't it? We have broke this. What does it mean? It means we have got a breakup structure to the upside. Now look, what low has broken this structure? The low is this one. Is this one. Okay, so that one becomes our protected low. So now if you look, we have a breakup structure to the upside. This is the low responsible for breaking the structure. Now look, so our higher high is this one. Since I've got to know we are in An uptrend market is this one now. So we're gonna mark it like this. What are we likely to see? We're likely to see that price respects this low and pushes up until it breaks this high. Okay, so we're gonna play prices as we learn, as we mark a market structure. This is gonna save you a lot of money if you get to understand market structure itself. So let's play price and see. Okay, yes. Now look here at this point. This is not a break of structure. This is called a liquidation. The highs have been liquidated. What does liquidated means? We have stop losses of sellers who have been pushing the market down. So their stop losses is always slated above. So they have been tagged, they have been corrected. So as we most of the time when we see something a week through, then price closes back into the range. It's like something you are preparing for a reverse, okay? But still we can break the structure. The breakout structure that is valid. You want to see we break this high and we close above it, not weakening it. This is a weak through, okay? So now let's see. And another thing that is common for a pullback, a valid pullback, when we are having a pullback, we want to see that the market from our trading range, so we have had this low, this swing low broke the structure. This swing has started giving us something like pullback. Now what do we measure? Firstly, we're gonna use our Fibonacci retracement to measure this trading range and see. I hope you can see. What are we likely to? We want to see that when we are having a pullback, we want to see this pullback taps into our 50%. So, because below 50% is the discount. Now, in an uptrend market, buyers tend to buy something at discount. Even if you are a trader, even if you are outside the country, you want to buy something at any shop, you want to always be wanting to buy something at a discount. That's why price, to confirm this as our high, we want to see price tags into our 50%, then comes back, okay? But when it doesn't come tags into our 50% and breaks, that is not a valid break of structure. That is something that is called inducement to trap early buyers. So we're gonna talk all about all that. So this is a valid break of structure. Number one, the high has pushed into our discount below 50%, and above 50% is the premium zone best for selling in case we are in a down trading market. Okay, so let's move, let's play prices and we see. So I've got a liquidation. That's not a breakout structure, and most traders, especially new traders, mark this as a breakout structure. You are doing this wrong. Okay, let's play prices and look and see what happens next. Okay, no, we are still in our trading range. Okay, no, yeah, now we have got a full body closure. Look, we had been expecting price to break this high to continue. Now look, this low had been broken through. So what does this mean? It means we have got a change of character, market structure shift. Okay, the market structure shift, the market has shifted. Look, I've been having something like this. We push up, we push down, we push up, we push down, we push up, we liquidate, we don't close above. Okay, meaning we are preparing for reverse. Okay, then we come back, we break this low. When we break that low, what does it mean? It means we are preparing for a reverse. Okay, you see, so that is it. Let's press it. So now we have shifted. Now we have our swing high. This is the highest point price reached. Okay, this is this one. Let's see price. Now we expect price to push back a little and then pushes down. Okay, let's play prices and see. Okay, now we have shifted our minds from buying to selling. Okay, you want to see a real pullback. See, and anyway, by measuring pullbacks, I want to see 3 candles of the same kind. Okay, 1 2 3 closing above or below each other's. Okay, like when say I'm in a downtrend, I want to see this candle get another candle closed, get another candle closed. Okay, see 1 2 3. So that verifies that we are in what, a downtrend. Now look at this. We have 1 candle, 2 3, 1 2 3. They're closing above each other. That means that is a valid pullback. And another thing, you want to see it comes at least to our 50% of the trading range. Now after shifting, we got something here. This was the low price reached before pulling again back. So now our trading range is this one. From this high, let me remove this a little. This was the liquidation from this high to this. Okay, let's see. So as the market structure suggests, breakup structure or market structure shift, a push, a pullback a little, then we continue. So now we expect to break this low. Now look how the market price. Yes, look, we are still okay. We want to break this low. Simple. Yes, now we have broke the low. Okay, now look, this had been our trading range. We had this swing high that led to, after liquidating this high, sweeping out this previous high, we got a market structure shift. So this is the swing 1, this swing 2. So we need to measure our trading range. Okay, these swings we need to measure them. Okay, so now when we bring our Fibonacci retracement, you see that price, to get to know that this is a valid breakout structure, firstly price has shown 3 candles closing above each other, isn't it? The bearish one, the green one, and again price into our trading range has reached the discount, has passed the 50%. Now when we are in a downtrend, this is the premium upside. Above 50% the premium, below 50% is the discount. But now we are sellers, we want to sell at premium, so price has tagged us above 50%. That means this is a valid breakup structure, not a trap, because the market is likely interested in trapping because of its manipulations. So you need to be confirming what you do. You need to confirm breakup structure. Now this one is a valid breakup structure. You see, now traders, are you looking on how I can tell that this is a valid breakup structure or a fake one? Now look, when we get a breakup structure downside, we get to know that now we are selling the market. We are in a downtrend. So what do? I need to mark my high. Look, I need to mark my high. Okay, this has caused the breakup structure. Now what am I waiting for? A pullback, because what we know as market structure suggests, after a breakup structure we are going to have a pullback. Okay, a pullback. Now how does this pullback looks like? It's gonna look like something like this. When you look at it, something like uptrend. Now this one gonna cost you money if you don't understand internal and external market structure. Okay, this is what something kind of something you are waiting for. We get there, a break of structure. Okay, something like this. As I can show you previously, when you're marking market structure, when you want to be on the side that is winning, we need to mark a market structure using the external swings. Okay, we have external and internal. Now this, look at this thing, this is internal. You see, you can't be marking all of this. Look here, back. Okay, I not show you. Look here, what's this? What's this? Well, this is internal, gonna make you lose a lot of money. You can't even get, so the market buys, sells. You see, you can't be marking all of this. You're gonna lose a lot of money. You see, we mark, you see, we only mark the external ones. So if you're gonna be doing the way I do it, that's gonna save you a lot of money. Okay, let's continue. Now I've got a breakout structure. Let's see how price reacts. Are we still in a downtrend? Yes. Now look, so this is a pullback. One candle, two candle, three. They're closing above each other. As you know, price action, how candles, how bearish candles and bullish candles close at the end. Now this had been our low. Okay, firstly we have got three candles. Let's play prices. Okay, now what I'm teaching here, liquidation, a break of structure. Now I want to look at this. Is really this a valid break of structure? Oh, an inducement. Now when you look at this, from this to this, when you bring our Fibonacci retracement to measure this, okay, so step one, this pullback past it. Okay, we got three candles closing above each other, but the sellers were not tagged in. Okay, the sellers were not tagged in. So that means they are pending orders, because sellers don't sell at discount. This is discount below 50%. Sellers sell at premium above 50%. So they are pending orders left here. That's what you need to know. But right now we are just marking market structure. So this is not a valid break of structure. Okay, this is fake break of structure. Now I want you to be understanding valid and fake. This is a fake break of structure. So what are we do? This is something we mark as inducement. Okay, or something we mark as liquidity. XX. What you need to know, when price is in a downtrend, the liquidity it corrects. So I may use something liquidity when you don't understand it, but that liquidity simply means money, pending orders, stop losses for traders. So many traders are gonna mark this as lower high. So what are they gonna do? They want to sell at this level, something like this. They want to sell at this level, their stop loss above, slightly above, their TP down. Okay, something like this. So market makers know this, that most of the traders are going to do this. They're going to mark this as a lower high, forgetting that price did not tag the sellers in the premium zone. Let's leave that. We concentrate on what we have been talking about. This video we're concentrating on only market structure. Now let's look now how markets moves. Okay, Okay, yes. Now you see, look at this. Now the stop losses gets collected for traders who had marked here as as a higher high. Okay, so that as I've been showing you, you wanna enter something like this, target these lows, put your stop loss slightly here, something like this, and you get tagged out. Your stop loss gets hit. Okay, simple as that. Now let's say they have swept. As I've told you, when we are in a downtrend, number one liquidity is the previous highs. So this had been a previous high, must be swept. And we are when we are in an uptrend, something like this. What do you see? So what becomes there? The liquidity is these lows. They are likely to be swept, and again we continue. Okay, they're likely to be swept, and again we continue. So that's what has happened here. How? As I've been in a downtrend, okay, I've been in a downtrend. This now price came back and swept this high, fake high, like this a little, and again continued. Expect it to continue. So that is it. So let's continue with our market structure, marking and understanding. Okay, we continue down, 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 down. Okay, okay. Now look this. So since this high had been swept, so can now mark as our, we can use this as our high, our higher high. Okay, we can use this as our higher high. Now this is not a pullback, this is not a pullback. Let's continue. Let's continue to play prices and see what they're gonna do. Now I think something like this we are in. This is what we call consolidation. The market is in indecision. Okay, the market is balanced. Now the price they are in, buyers and sellers are accepting the price. That's why you are seeing something. You have known zones where price is respecting. Okay, can look and see something like this. So this is what we call range bound markets. This is the kind of market not good to trade in. You need to wait. Something like this I have shown you, something like this. Okay, now let's play prices. And so one side is likely to be swept before the real move. Okay, yes, the low gets swept out. Okay, let's continue down. We are continuing downward. Now look, after this we get our value pullback. This is not a pullback, something like consolidating. Here I've started getting a pull. Now what do you want to see? I want to see this high gets taken out. Okay, let's play prices. Liquidation. We have just liquidated it. Can you really look here and see? This is not a breakup structure. This is liquidation. We have liquidated it. I've created stop losses of buyers who have pushed price at this level. Let's see. Now a real breakup structure. Back into the zone. Okay. Now have this liquidity. I don't want actually want to talk about that. That's gonna be another video about these boxes we're seeing in my chart, on my chart. It's another video that's about essential liquidity. That's gonna be another full topic talking about liquidities. Now it gets swept a little. Okay, open London, sweeps a little. Now, as I had told you that in a downtrend, the liquidity is always the previous highs, so this one gets swept out. Okay, now liquid has been collected. So liquid, want to talk about liquid fuel needed to push the market in the real direction. Okay, let's see now what happens. Okay, price still seeking more liquidity. Look, we break, we liquidate the lows again. Wow, we liquidate again, we break structure. Okay, now I broke structure. Now we have broke structure. I've got a break of structure. Let me make this simple, little. Let's run here. We had a break of structure. We sweep these highs. Price, after price sweeping, we expect price to come and break another structure to the downside here. Okay, this sweeping above is not a market structure shift. We had been still in our range till price tapped into our 50%. So this is a break of structure continuing down to the downside. So now this becomes our highest point price reached before breaking. This is London high. Okay, now price is doing what? Came back. This is not a pullback. This is not a pullback. This is not a pullback. Now see how price leaves liquidity. If someone comes and suggests that this is a lower low like this, it shows he has broken. Now what he gonna do? Gonna mark this as his high. Okay, let me this as his high, and forgetting that when we are in downtrend, this highs becomes liquid, must be swept out before continuing down. Let's see, this is not your breakup structure. Let me check and see what price does. Okay, now you see, are you looking at this? I've got my three candles, 1 2 3 closing above each other, so that is my low. So this is my low, this becomes my low. Now what am I interested? I want to set this price, sweeps this. Okay, when we sweep this above this and we tap into our 50%, you don't need to forget about this. This is important, that you need to measure. I not measure the previous one, but I need to measure this high that caused the breakup structure with the one that is wants to validate a pullback. Okay, we want to see price tags into our 50%. I think let me remove these colors. Okay, let me remove these colors so that everything looks okay. White. Wow. Okay, let me just leave it. So above 50, that is it. So let's play prices and see if we get tagged in. If you're like interested to see price sweeps this high, taps into our 50%, continues down. Let's see what price does. Okay, now price has broke structure. Price has broke structure without tagging into sellers above. So you see, so we have this is liquidity, This is also liquidity. This is high, previous high. Let's say, so this is not a break of structure. This is a fake break of structure. This is a fake break of structure. Let's process. Let's see. Price dumps. Wow, look at this. Look at this. Okay. Now we are getting something like a pullback. Okay. Can you really look at it? Pullback. 1, 2, 3 candles closing above each others for downtrend. We look at bullish candles. This is our low. It is costing a pullback. Now I want to see, as this had been our fake high, fake lower high, I want to see if price can come and respect this trading range and continue down, so we confirm it. So when we try to measure this 50% is here. Let's see price if gonna take out that 50%. Yes, has been swept. So now if we break, that means that is had been our high. Look, not yet, look, liquidation. This is a liquidation. Now I've got a breakout structure. Now look, so since this had been our fake high, now since price has respected this trading range to this one into our 50%, that means price has reached the premium. Sellers have been tagged in. So now this one valid to be a break of structure, a valid break of structure. So this had been our highest point price reached before breaking. Now I want to see that this high gets respected. Once see that this high gets respected, now after breakout structure, we expect a pullback before continuing down, or a shift to market can shift. Okay, now we get a gap. Price likely is consolidating. Push up. See, push up. So this is our low. So this is our lower low. What are we interested in? As price is pulling back, want to reach our 50% of this trading range and then dumps. Then we mark this as a wide breakout structure. Now let's see, price is likely to dump, but has it reached our 50%? Let me measure, because I can't tell by eyes. Yes, price has reached our 50% here. So that is, if we break this, it's gonna be a valid break of structure, not a fake one. Let's see how price comes back. Okay, we have not yet shifted from selling to buying. This is internal. Okay, look, still look. Now look at this. All of this is happening, but we are still going bearish. We are still shortening this market until this gets swept out, or this one. If we sweep this high, this lower high, we get a shift. If we sweep this, we continue selling. Now let's look at price, the reactions of prices. Okay, okay, okay. Yes, have you seen it? Price did not respect it. So that means you have shifted again. You have shifted from selling to buying. Okay, now price, the lowest point price reached before shifting is this one. As I told you, we mark external. Don't attempt with internal structure. This internal structure gonna make you always be on the long side. You see, marking this is internal. We don't mark this. You see, we don't mark at this. We don't mark at this. Gonna confuse you. This is the best view you can view your market, so that you can always be on the right side. So we have shifted. Now we are going for buys only. Let's see. After breakout structure, we expect a pullback. Okay, look. Okay, we have our high here. Now look, price has continued. Can you see? Can you look at this? Price as breakout structure gives us a little pullback. Now this is what I call a fake BOS, a fake breakout structure. You see the it's not a breakout structure actually. If you measure our trading range, you can literally see by eyes that we did not reach our 50%. Okay, let me bring, I don't want to be using eyes.